Awesome. I was over here jamming, y'all, and I was so excited about all the stuff I had to talk to you guys about. I realized I'm on my work computer. I didn't have Zoom pulled up, and I had to go find Zoom. Luckily, I know the ID for the Zoom call by heart, so I know it like a phone number. So it wasn't that bad, but I was like, dang, they about to miss it. No, y'all won't. It's okay. All right, so I'm gonna get started. Um, Man, this morning we started out with a bang as far as US news is concerned. I'm gonna share my screen so you guys can see this calendar. So CPI news came out this morning. Um, I'm sorry, no, it didn't. Retail sale news came out this morning. I'm on a week behind. Um, Retail news came out this morning, and retail news was actually like pretty good. Like really good. So there were like some sectors in the market that had like 14% gains in the market. So I'm just going to pull it up for you guys really quick. So anytime you see those links, click on it. If you've never clicked on a link before, I'm going to show you guys how to kind of navigate this site really quick, because this all kind of feeds back into what I was telling you guys before about inflation and things to look for when a market could possibly be getting ready to go into hyperinflation. So a lot of things are playing into this, and a lot of things are going to continue to play into this number going forward. So anytime they have numbers that come out for the Census Bureau, they'll stick reports over here on the side. So monthly retail sales, and it will look kind of overwhelming, but trust me, just click on the link and then click on however you want to see it. So we're going to click on the PDF because it's going to be so much easier for us to look at this way. So this is the report. This shows us all the spending. One thing I'm super excited about with this spending report is that people actually spent money. So that's a good thing for the economy, because when we're talking about the economy, when we're talking about stimulating the economy, which is what the stimulus packages were supposed to have done, this is what you want to see. What you don't want is for the government to continue to print money and then people not spend money in the actual marketplace, but it goes more towards banking, towards paying off loans, paying off debt. Those things don't really stimulate the economy on the back end. It just helps people to keep money in their pocket. But the numbers you would have heard on the news this morning and things that they were talking about were some of these numbers down here. Not going to harp on these for too long, but one thing I wanted to note was that sporting good, hobby, music instrument, and book sales were up 22.2% from last year. Non-store retailers were up 28.2%. So it was a lot going on with these retail numbers. So down here, these are some of the sectors that they highlighted: beverages, personal items, clothing items, sporting goods. So with this report, they only divided it out into a few categories. And then this is more or less like a different type of summary, percent changes. And motor vehicle parts for last year was at 13%. You can see where it was in December. So, just kind of looking at some of those numbers, kind of taking into consideration, like, okay, what's going on, what happened, and where do we go from here? So what I foresee happening with the next number that we get is that we're going to have a ton of retail food services numbers We're definitely going to have food and beverage stores, which consist of grocery stores. This is the number I'm really looking for with the next retail sales. Grocery stores, gas stations, clothing accessory stores, and all of those categories there. General merchandise and warehouse stores. I say that because think about what's going on in the country right now. In the last Zoom call, I pointed out to you guys that the high temperature for the whole United States, minus the southern tip of Florida, was like 56 degrees. There's been two major weather systems that have come through the United States and hit the north and the northeast. The third that came through is what we felt, let's see, last weekend. The fourth kind of came through, hit Texas, and it's what we got like as far as rain this week. And then we have a fifth coming through now through tomorrow. So we're getting all of this cold weather. We're getting freezing rain, snow, ice in places that have never experienced this, don't experience it often. So it's a strain on the system because now when we start looking at what do people buy during times like this, like they go to the store and buy everything that is on this list that is a major item. They're going through, they're putting gas in their cars, doing maintenance on their cars, their tires for people who, needed new tires and then have to drive out in this weather. Furniture, home furnishings, some of that could consist of like bedding, mattresses, pulling out some of those items in the home furnishings could possibly go up. Appliances, somewhat, space heaters are considered appliances. And food, grocery stores. So I'll put the clip in the Telegram group chat so you can see it. But a friend of mine went out today to go to the grocery store, and there was a line wrapped around the grocery store, and they were only letting people in like 10 at a time because the grocery store was so full. And they had to start limiting how many items people could actually get in the grocery store. And this was in Houston. It got kind of crazy just watching all the stores, all the lines, wrapped around. So that's not just in Houston though. That's kind of all over the country. People are preparing for this weather. That's really going to be something that is going to really, really, really affect all of the numbers that we start looking at. This cold snap that we're having, energy, oil, food prices, inflation, supply chains. So when we look at manufacturing and services numbers, all that's going to be taken into account for the next numbers. Like this cold snap is going to have a really big effect on those numbers. So I'm gonna close this out, or actually I'll leave it open so I can copy the link into the Zoom chat for you guys so you can see it and get to it easier. But yeah, these numbers were good. So if you were looking at US 30 around 825 this morning, and then 830 when this news came out, you would have seen like that immediate pop in price of US 30 because of this news. And then price kind of stagnated a little bit because it was almost like the market prices things in. And when we say price things in, it means that the market has already accounted for it. It's like seeing something coming before it actually happens. So you just kind of brace yourself for it. It's like the market is kind of bracing itself for certain things. And it's kind of like, oh, okay, I knew that was going to happen. So, it's like, yay, or, the excitement happens and it's like, all right, whatever, let's move on. So the other thing I told you I was going to be looking at was the Australian employment numbers. This is kind of like Australia's NFP. They actually stayed fairly the same. So even though these numbers dropped, the employment change and the unemployment rate, it wasn't by much. It was fairly consistent with what they forecasted. So going on through the rest of the week, I'll be looking at Philly Fed manufacturing, crude oil inventories, and definitely will be paying attention to crude oil inventories on a daily basis for me. If you want to know how to follow crude oil inventories on a more micro scale, like looking at it by the hour, looking at production and such, you can go to the energy information website. You can go here, and so they give highlights, but there's also a link. I have to find it because it's not on the homepage anymore. But it used to be right here. It used to be a little graph and a link where you could actually click and watch live production and see what was going on with pipelines and such. But when I find it, I'll put it in the group chat so that you guys can have it and you can watch what production is like on the rigs, how many rigs are online, that sort of thing. And then Friday, we have all of this Euro and GBP news, followed by US news and Canadian news. So this week is going to be interesting to kind of wrap everything up with, as far as like the Euro news, because Euro news is going to be taking up most of that space on Friday, and just kind of tying that into some of the things we talked about on Monday with Mario Draghi, and some of the things that we've talked about in the past with debt and those sort of things. These are countries like France and Germany who are in major debt, and we're needing to see their production and services up. They need to be significantly higher than what they are now, so that we know that their economy is working, stimulated, and they can help themselves by getting out of debt, paying off debt, and then being more, making themselves more useful to the European Union. I want to also just kind of go back really quick, because I want you guys to just really understand like how significant this cold snap is. This is the time of the year. This is going to help you guys understand futures, commodities. If you guys ever want to start trading options, if you don't already, like this type of stuff is going to help you guys. So like, check this out. So I want you guys, don't overcomplicate news. Don't overcomplicate the fundamentals, because a lot of it is common sense. Like, you already know it. So like, if I ask you, what is the main item that comes out of Florida? Like, what food item is like comes out of Florida? Like, most of you would be able to answer and tell me like citrus fruits, like oranges, lemons, grapefruits, like those things come out of Florida. If I ask you, where does most of our bread, most of our corn, most of our wheat, just staple food items, where do most of those things come from? The majority of you would be able to tell me the bread belt. But to be more specific, the bread belt, when you look at it on the map, is like Nebraska, Arkansas, Kansas, South Dakota, like the middle of the United States, like from Oklahoma up. So when we're talking about weather, when we're talking about all the things that are going on right now, this is the time of the year. It's February. This is the time of the year where farmers are starting to go out, assess their land, and prep to get ready for the items that would be summer harvest items, corn, like your cottons and your like certain types of wheat and tomatoes and that sort of thing. So like, this is when you would actually be trying to go out getting your land ready for those things. You can't right now when there's ice and snow on the ground. and temperatures are in the negative degrees. The ground is frozen for like the first inch and a half at least when temperatures are negative. So you can't really do anything. You're not doing anything during that time. That's going to put a strain on food supplies going into the summer. Like, yes, I understand that this weather is not permanent and that, cold weather, as they're predicting, is going to go away next week. One thing we have to realize is that a week's delay in farming time is like hundreds of thousands, if not millions of dollars worth of food. That's food that's not going into the food chain. Also, one thing I want you guys to realize is that there are lots of warehouses in the middle of the United States. Most of the major corporations in the United States keep warehouses in the middle of the United States. Why? Because if you keep your warehouses in the middle of the United States, you have something underground, you're not really at a super high risk for earthquakes because it's not California. You're not at a super high rate for hurricanes because you're not the Gulf, you're not the East Coast. The most you're really just worried about is tornadoes. But typically you have something underground to help account for that. I'm mentioning that because right now, a lot of the supply chains in the middle of the country are blocked. Supplies aren't going anywhere. So when I told you guys about stores in Texas having lines around them for people trying to shop, how are those shelves going to get restocked? Also, the factories that aren't opening or that aren't open right now that produce these items, like the workers aren't coming in, the items aren't being produced to be packaged, to be shipped, to be stored or sent to the stores. So remember last year during COVID, when COVID first started, everybody rushed to the store to buy items and there was a delay getting the shelves restocked again. Cold snap, people rush to the store. And this is happening all over the United States, not just Texas. So everybody's rushing to the store to buy items, rushing to the gas station to buy gas. There's a gas shortage in Texas and they're producing and sending out gas. There's rolling blackouts and Texas is still sending out natural gas. And their own citizens, like Texans, don't even have natural gas. They're trying to figure out why is it that we don't have it, but you're sending it to everybody else. So Texans are a little upset right now. So supply chains are really screwed up right now. So that's something I want you guys to keep in mind, like as we're moving forward, as we're like going through, like don't overcomplicate fundamentals. Like for what I just said, it's as simple as just kind of thinking like, okay, oil comes from Texas, oranges come from Florida. What is North Carolina good at? Tobacco, cotton, pork production. What is Georgia good at? Peaches. And just kind of thinking about those things. Not all of those things trade on the market, but it's just kind of thinking about what supply chains could be hurt, what supply chains are going to be helped. We're definitely talking about oil, like I said, for like the next several weeks or so. So anyway, keep that in mind. All right, I'm gonna move on to stocks now. All right, so on the last Zoom call, I showed you guys a PowerPoint, and I'm gonna stop sharing my screen for 1 second. I showed you guys a PowerPoint and we just kind of went through, talked about the basics of stocks, how to trade stocks, is what I'm going to cover tonight, and what to look for. We're going to start talking about some of the market orders. So instead of actually going through and doing the slides like I did last time, we're just going to go through and actually look at it. So when it comes down to trading stocks, the main thing you need to know before you even like do anything is you have to trade stocks through a broker. You have to have a broker in order to be able to trade stocks. So for the average retail trader right now, the easiest way without having to have a lot of capital is Robinhood, which I didn't talk about their congressional hearing tomorrow, but that is tomorrow. So just, listen to that at some point or read notes from it. There's Cash App, there's Webull. Those are the three easiest platforms to just go and get into stocks. Then there's TD Ameritrade and E-Trade and Interactive Brokers, Charles Schwab. So there are other brokers out there. You definitely want to pick a broker that's reliable. Pick someone where you'll be able to put your money in and you know that your money is safe and it's a reliable source. That's the biggest thing with trading stocks. So whenever you get your broker, you put your money in, all those brokers will have different capital requirements, meaning in order to open the account, you might have to put in a minimum of maybe 1,000 for one or 10,000 for one of the other ones. So just make sure also that you're paying attention to that. Fees, I'll be going over fees and all that kind of stuff later. Once we really finish and you guys want to open up accounts, or if you've already opened up one, we'll go through and talk about it then. But just know those are some of the things to look for. So let's say, boom, you have your account open with your broker and you're ready to start trading. Your account is funded and you're like, all right, I've been hearing about stocks. I got my account open, my money's there, let's go. Well, in order to trade something, you need to know the company that you want to trade and you need to know what their ticker is. So a ticker is the abbreviation for the company. It's usually 3 or 4 digits. If it's 5 digits or 6 digits, that typically means it's a penny stock or it gets traded on the pink sheets. I typically stay away from anything above 5 digits for the abbreviation, solely because, the company in and of itself probably has gone into bankruptcy or is trying to come out of bankruptcy. There are, I think, maybe a few that might have 5 that are good companies, but you just still need to pay attention to it. So once you know what that is, you can type it in, search for the company. Some brokers actually have it set up so if you know that the company is Apple, let's say it's Apple, but you don't know what it is, you can just type in the name and it'll come up. And so you would click on it, comes up here. This is Google Finance. Google Finance is good. If you guys use Gmail, you can actually go through and have it send you alerts and put it on your calendar when a certain stock has earnings coming up, when their dividend gets paid out, when they have news that comes out for the company, it'll actually send you the news items if they're high level news items. So that's one good thing about using Google Finance if that's what you choose to do. Those are some of the benefits. So what are you actually looking at here? So I just chose Apple. It's just one of the first ones that comes to mind when you think about stocks, or when I think about stocks. It's the name. So we're just going to start from the top, go down to the bottom. So you're going to see the name of the company. Off to the right, you're also going to see their ticker, which is that abbreviation for the company. When you're looking at CNBC, Fox Business News, you're going to see the ticker, and you're also going to see the company of the name, and maybe some abbreviated form if it's a super long name, but you'll see that followed by the stock price and how much it's up or down at that particular time. So right now it's aftermarket. Aftermarket trading is still going on, and the market closed down 1.76%, which is what you're seeing here. So it'll show you the movement in percent and then also in dollars. So it was down $2.35 today. After hours is after 4 o'clock. So the stock market opens in the morning at 9:30 and closes at 4 o'clock. And that's the US market. And those are all the indices. They all open at 9:30 and they all close at 4 o'clock. So after hours trading is going to be anything after 4 p.m. And after market, they're currently up 4 cents. So when the stock market opens in the morning at 9:30, the stock price is going to open up at $130.88, which is right here. So that's what it's actually going to open up at in the morning if this after hours price does not change. So the other thing you get with any broker, with any platform that you're looking at for a stock is your chart. You can almost do some of the same time frames with the stock chart that you can with the forex chart, but here the lowest you can go is a daily time frame. But within that daily time frame, it breaks it down into like 2-hour increments here. So you see the price where it actually opened at 9:30, and then you see the close. It's all colored. And if this stock price had actually opened above the previous close, it would be green. But since this previous close, this dotted line, sorry, okay. So this dotted line right here above where it says previous close, that is going to be your indicator, your marker for what color price is going to be. Since it all stayed below for the whole market session, it's all red. And then after hours is going to be gray since the market isn't actually open. Down below, one thing that I always tell people to do whenever they start trading stocks is look at stocks that are in the same sector that is in the same grouping. So when you're trading stocks, the other thing to look at some point in time, if you're just trying to get into a bunch of stocks and get into stock trading and you kind of have a gist of what you're doing, it's cool to go for the big names and stuff, but at some point in time, you want to diversify. We'll talk about that on the next Zoom call. But down here, compared to, these are going to be stocks that are in the same grouping. So these are all technology stocks. They're companies that do something very similar to what Apple does. So the biggest thing that you want to be looking for, if you want to see how good Apple is as a company, you want to go through and find companies that are fairly similar to Apple and compare the two. So one good one that you could possibly look at would be Samsung, but Samsung is not traded on the US stock exchange. It's traded on the Korean stock exchange. And it's hard, super hard to get Samsung because it's not traded on the US market. It took me like 18 months to even get an approval to even begin the process to try to get Samsung. But yeah, it's hard. Anything that's not on a US stock exchange, if you want to try to get it, you usually have to go through a private broker, or if you have a financial advisor, you could go through them to get it. But anyway, back on topic. Down here, you'll find those companies that are fairly similar to Apple. You'll find Apple's news. You'll find out what's going on with Apple, with what's going on with rivals within that company, or within that sector of companies, excuse me. And then key stats. So key stats are important. These are going to be those things that you look for or look at when you're trying to really decide, like, okay, what stock am I going to buy? Is this a good stock for me? So the first thing that a lot of people typically look at whenever they're wanting to buy a stock is the price. This is the previous close. We already looked at what the current price is, but when you're looking at a stock, some people will say, oh, that stock is expensive. I can't afford to get a whole share, which kind of takes me back to the topic of brokers. Um, Out of all the brokers that I named earlier, Robinhood is one of the only ones, and Cash App, that allow you to buy fractional shares, which means that if you see Apple and you're like, man, it's $130, I can't put $130 into Apple. I only have $500 in my account and I want to buy some other stuff. You can say, well, I want to put $50 in. And what they'll do is divide 50 by the current stock price. Whatever that number is, that's how much of a share you get. So you could do it that way also with Robinhood and Cash App. So you don't have to really think that much about the true stock price. But for the other brokers I named, and for the majority of stock brokers, this will be the price you'd pay per share. That's the first thing people typically look at. This is the daily range, and this is the range in the last 52 weeks. So you would see on some brokers, this will be called the 52-week low, the 52-week high. It's still just the yearly range. Some people look at that and will say, okay, that range is super wide. That stock has been really volatile. Let's do one where it's really crazy. GameStop. So down here, the 52-week range, the low for the last 52 weeks is $2.57. The high, $483. If I were looking at this as a stock and I would go back and look at the current stock price, that would be a no for me. That's not appealing. Because if I look down here at what this range was for the last year and look at the current stock price, I'm going to ask myself, what in the heck happened from $483 to $45? What happened? Is this company getting ready to go bankrupt? What kind of financial issues are they having? Did their CEO leave? Did they get into legal trouble? Like, what kind of lawsuits are out on them? Like, those would be questions that I would ask myself. So that's why the 52-week high and low are so important. Some people look at market cap. We'll talk about the definition of market cap on the next Zoom call, but I want to show it to you. Market cap is where you look at the actual stock price and how many shares the company has, and you're kind of looking at like the max price, the cap of that company financially. So some people look at that because they only want to invest in companies that have a lot of money. And some people look at small caps because they say those are more like homegrown small businesses. We'll talk about how the indexes or the indices are made up next week, and put a star by this if you're taking notes. Small cap stocks, they trade on an index called the Russell 2000. They also have like the Russell 5000. That's a strong economic indicator for how well the economy is doing for the average person. So when you hear about that on the news and you hear that the Russell groups are doing well, that means that the average everyday person is doing well because that looks at small businesses. Volume is going to be the number of shares traded, and you can hover over these and it'll show you like a brief definition. Another thing, this is one of the things that I look at: dividend yield. How much are you paying me to hold on to your stock? Like, what are you paying me? So this dividend yield can be paid out divided by the number. So you take that dividend yield, divide it out by however many times a year they pay it. And typically for most companies, they pay it out every quarter when they do their earnings report. So you would divide that number by 4 and then multiply it by your shares. You get your however much you'll be getting for that quarter. So I'm gonna go back through and show you guys this. So someone had asked me someone had asked me what my thoughts were on FinViz. I love it. It's one of the sites that I use every now and then to help me find stocks to buy. You can pretty much sort out anything you want to buy. This is a screener. So all of those little things that I just showed you under key indicators, key stats over here, you can come to FinViz and actually look right here. So I'm just going to go back to the very home page, like the very front page you get. Let's see. So this morning, just to kind of show you guys, so this is the volume, this is the actual number of shares that were exchanged today for a lot of these stocks. So these first two, I was actually holding on to this one, these first two this morning. And I'm glad I sold when I did because people really pumped that stock up. It was up 121% today. And load was up 157% today. But when you look at these, people see that and will say that stock was up that much, that one was up, I want to buy it. Don't look at the percent change. Look at this volume and then go and look at what normal volume is for the stock. Don't always take a price and a percent change at face value and think that it's going to keep going in that same direction. You always want to do your due diligence, but in order to just really get started and to go through and find stocks that you really want to participate in, click on screener. And right now, stocks are listed in alphabetical order when you first click on screener. So what you'll do is you'll go through and you'll click on the exchange. So if you know what exchange your company trades on, click it. I don't always know, so I don't ever use that feature. Market cap, this is what I was talking about when I kind of mentioned the Russells earlier. So for me, I like shopping through large and mega cap stocks. I'm not going to click on either one right now. I'm just going to go through and kind of show you some of the options. Earning date. So you can actually go through and sort for stocks by earning date. I would suggest doing that if you're trying to build a portfolio where you get paid dividends like every month. It's possible to do that. I did it for a while when I first started trading stocks, and it's actually pretty nice because you just get residuals like every month or every 2 months. So that's a good way to pick and choose stocks based on a date. Target price, I don't use target price. Some people do if they're trying to find stocks that are like severely above or below their average or their targeted price by analysts, or a particular target price that gets shown whenever you look at the details of each company. Index, I don't typically click on that for the same reason of the exchange. I don't always know. Dividend yield is something that I'll go for. How much of a dividend am I going to get? One thing I will say about this is that companies that pay out super high dividends, you want to pay attention to because they get really volatile. They're companies whose price fluctuates a lot and they're giving you a big dividend to hold on through really big price swings. So typically, whenever I'm looking at a stock, I don't go over 6. I typically stay 6 and below, unless it's just something that's really, really good, or I feel like the company has an extremely positive outlook. Average volume. So how many shares are being exchanged and traded? Want to find a stock that's trading at least 1 million. So I'm going to click on 1 million. IPO date. You want something that's already there. I don't want to go for something that's IPOs within the last month. The price is still trying to find its floor, find its peak. It's still trying to do its thing. So I usually look at those, but I don't shop for those until they've been on the market for a while. Sector. This is what you'll click on if you want to diversify. As I mentioned earlier, just kind of spread your money out. So if you want to do energy, if you want to do financials, healthcare, finding things that are in different sectors, in different groups, so that your money is safe during, whatever kind of market conditions we're in. And industry, same thing, can help diversify there. Some of the other ones, I don't really click on those. I stick mainly within these first couple of columns. And now I'm gonna go back and click on market cap. So for right now, I'm just going to go with mega cap. These are the really large companies that are out there. The first one that pops up is Apple because it's in alphabetical order, but I want to put these in order of market cap. So you can sort these ascending or descending. Apple, Microsoft, Amazon, and Google are the top when it comes to the mega caps. So some of you will probably ask and wonder why Google has 2. Google has 2 because Google split its class. So on the last Zoom call, I mentioned Berkshire Hathaway and how it had class A and class B. Google did the same thing whenever they fell under the umbrella of Alphabet. They split Google's divisions into 2. So now they have a class A, class B, and that's why it's split like that. All right. So now if I were actually trying to go through and find a stock and I was really and truly basing it on market cap, I would go with Apple. Apple has the highest market cap, and I'm like, all right, I want to see what Apple is all about. So I get a lovely chart. It starts putting stuff on the chart for you here. Don't pay attention to a lot of that. It's going to get super technical. This website is really good for trying to help you if you have a strong technical basis. But for the average person who just wants to see the numbers, wants to see like what's really going on with the company, this is what you're looking at. This area here and this area down here. So this is what you're going to be looking at. We're going to go through and like cover all of this stuff in detail so that you know what you're looking at. I just want to show you guys how to find it, what you're looking at as far as the screener is concerned. Like just knowing, okay, those are the different things I can click on and sort through. That's the company's name, that's the ticker. That's how I find what I need to find as far as a company is concerned. I wanted to show you guys this also because it's going to come into play pretty soon with oil. And so I wanted to show you now so that you know. Every company comes out every quarter, has earnings report. They give out their financial numbers. They give out how they are going to proceed as a company, their financial documents and stuff. So when they do, it shows up in a document like this. They'll be on a webinar. So you'll be able to call in when you own the stock. They'll send you an email. Hey, this is your web link, or this is your phone number. This is how you get in on the call. Get in on the call. Also, with some companies, they'll send out an email and say, hey, do you want to ask any questions on the call? Or is there a question you have that you want answered? And you can submit your question. It'll get asked on that call to the CEO, or, you know, whoever you address the question to. So that's a pretty cool thing about earning stocks. But this financial spreadsheet right here, these numbers are going to be really important when we start talking about Biden's initiative for carbon tax. When we start talking about gasoline, we're going to look at this for the gas companies, because I want you guys to see, when we look at oil and continue to look at oil, how oil companies are being impacted. We're going to see Q1, Q2 numbers for every company. This is Tesla. Tesla is going to benefit from Biden's initiative when it comes to the carbon tax. So I wanted to show you what this summary looks like. Every company has one. Every company that's public has one. They usually put it out. So since these are in millions, this 6 or any number with a comma is actually billion. So this is $6.3 billion right here in automotive revenues. Anything that you see with parentheses around it is negative. And then of course your percentages are percentages, and then it's of what it's based on, whatever is to the left over here in this column. So with Tesla, they give out this really fancy PowerPoint. It's like 34 slides, but it's nice. Every company has one when you invest in a company or before you even invest in the company. I highly suggest that you go through and look at the very last report that they gave out. It's easy to read. They have paragraphs in here for you to go through and read about the company. It's in layman's terms. For all of these abbreviations that are in here, they go through and explain what they are on later slides. They give you pictures of like new models of vehicles or items or things that they're planning on coming out with in the future, production, what they're planning to do. You know, for any company, they're just going to show you as the stockholder why you should continue to invest, why you should continue to be with them, keep your money there. So please use that to your advantage. So in addition to looking at, I'm gonna go back to the screener really quick so I can show you as I'm telling you this. So in addition to looking at the company, just the name of the company, what should you look at? What do I look at? What do I look at when I am getting ready to buy a stock? I want to know the company. I go through and I look at that report I just showed you. I want to know what they're doing. Before I even look at any of that other stuff, I'm like, Apple or Tesla, let me go see what they're doing. I'm going to look at the last earnings report. I'm going to look at the last earnings report. And then if I like it, I like to try to keep my stocks diversified. So I'm going to make sure it's in a sector that I like. I'm also going to make sure, for me, that it's in a large enough market cap that I don't have a lot of volatility. I like for my portfolio to stay relatively balanced. I don't like my stocks moving too slow. I don't like them moving too fast. So I try to keep everything balanced out. And the market cap does that for you. I want to make sure that the market cap is right for me. We'll talk about price to earnings ratio, but I want to make sure that I'm getting the stock at a good price. I want to make sure that, you know, this stock that's, you know, $100, is a good value, because $100 stock could really be an $80 stock. And an $80 stock could really be like $150 stock. When you really start to look at like the values of the company and where they plan to go, this quarterly statement that they put out, when you really start to see where a company is going and what their plans are, that'll tell you, in addition to the price to earnings ratio, okay, is this a good stock to buy? Do they have good goals? The things that we're supposed to do as individuals, have that 5 and 10-year plan. Does this company have a good plan? Do they have a good 1 year, 3 year, 5 year plan? Like, what are they trying to do with themselves? And then I also want to make sure that the volume is good. I want to make sure the volume is a good, decent number. I want to make sure that people are actually trading the stock, but I don't want to see too many people trading the stock, because then that starts to look like what they call a pump and dump, which is where um, a lot of people boost the stock price, and the stock price gets boosted really, really high, and then price falls, almost like GameStop. And then the dividend, definitely pay attention to the dividend, because my stock portfolio, I build based off of getting a residual income. Most people who trade stocks want the residual income. And if you're buying stocks and you're holding them for a long time, you want stocks that are going to hold their value over time, have really good structure to them, things that are classics, things that aren't going away. So companies that, to me, embody that, and companies that I own, companies like Apple. Apple isn't going anywhere. Apple has diversified itself enough in the United States where everybody either has an Apple TV, an iPhone, a Mac. Um, they have streaming products. So they're not just a niche. They're not in one little corner not doing anything. They're branched out. Um, Coca-Cola. Coca-Cola is another company I own. I love it. I adore Coca-Cola. Um, I do so because Coca-Cola is a classic brand. Coca-Cola has been around for a really long time. Coca-Cola is on every continent. They've taken Coca-Cola. It's not marketed. It has to be imported, but to Antarctica. So it's everywhere. Every continent you go to on the planet has Coca-Cola. Um, and it's a sponsor of a lot of sporting events, a lot of wholesome events. They do a lot of charity work. And then under the Coca-Cola brand, they also have other products, Keurig um, being one of them, Dr. Pepper. So it's not just Coca-Cola, the soda. There are many things that fall under Coca-Cola. Another one is Johnson and Johnson. Love Johnson and Johnson. Johnson and Johnson is a very stable, steady healthcare stock. They do pharmaceuticals, they do healthcare devices. And when you look at their stock price and how it moves, it's very steady. It doesn't, have huge price swings. Their dividend yield is great. CEO is great. The way they've spread themselves out again in the market is good. So it gives you a nice, stable platform to stand on when it comes to healthcare. If you like stocks that move, stocks that will give you a nice little ride, the FANG stocks, the stocks that analysts have now called the FANG stocks, FAANG. It's Facebook, Apple, Amazon, Netflix, and Google. Those are nice, large to mega cap stocks that are companies you can get into. Their growth, they're about innovation, they're about really building the internet tech platform, and they all move together. So beware if you choose to invest in all 5 of those at the same time. that they all move together. They all move together. So if one's up, typically they're all up. And then if one's down, typically they're all down, unless it's like major news, some type of earnings report that just went sideways. That's the only thing that would really like pull one out from the other. But typically all of those move together. And Amazon, I already mentioned it when I mentioned bank stocks, but it's a really good one because Amazon is huge. Amazon is not going anywhere, no matter how many times they call Jeff Bezos to Congress to talk. Amazon is not going anywhere. Amazon will break up into smaller divisions of Amazon before they just go away as a company. Why? Because Amazon is the largest online retailer. Walmart's next rival is, Amazon's next rival is Walmart. Amazon is starting to combat that now because they're building out retail stores. They are, again, online and a huge presence. They're buying smaller companies, integrating them into the Amazon brand. So Amazon bought Ring, the doorbell service, for like $1 billion. That company was once on Shark Tank. Anyway, so that just goes to show, side note, that if you have a dream, follow it, because I heard that guy's story and it's so amazing. And now he's like the owner of $1 billion company. So Amazon bought Ring and then integrated it into Alexa and integrated that into their delivery service. So for those people who are super trusting, you could set up your Ring, and whenever your delivery was there, your delivery driver could enter your home, put your boxes in your home for you so they don't have to sit outside. And then the Ring service has a way where the locks automate to lock. So the doors could be locked. You could watch the delivery person put your boxes inside your house and leave. Also, Amazon grocery delivery has a service where if the person delivers your groceries, they could put them in your refrigerator for you and you could watch them do it. So Amazon integrated that. They took over the Whole Foods brand. So you can do Prime delivery with Whole Foods now. And it's so many things. They also have built out brick and mortar stores. So again, it's a lot. These companies, they're doing so many things. There's a lot of layers to all these companies. It's 9/11. So I'm getting ready to let you guys hear from Mr. Levels. Like I said, I could probably talk to you guys all night about stocks, for real, because it's my thing. But anyway, so look at those. Look at Johnson & Johnson. Look at Amazon. Look at Apple. Look at Coca-Cola. Check those companies out. I'll put some more in the group that I just want you guys to look at. I want you guys to just get familiar with actually like looking at stocks, get familiar with how they look, get familiar with the chart. The chart isn't going to be any different. I'll just pick a random one right now. The chart is no different than what we look at in forex here. Some of these you can actually trade on your forex broker, but they're candlesticks. You get your same patterns. They don't always follow the same pattern as forex. So if you see a gap here, please know that the stock will probably not come back and fill in this gap. So don't look to the gap fill technical analysis to always play out with a stock. That's the only thing. But it's the same. It's relatively the same. You get your chart, you get candlesticks, you can put your technical analysis on the chart, you can follow it through. And yeah, so someone put in the group chat just talking about the transition with, you know, everything we have going on, COVID is helping people transition to all of those services easier. It is, they are. So yeah. Yeah, so look at those stocks, and I'll put some stuff in the group chat for you guys also, because I realized that on the last Zoom call, I didn't give you guys the slides, and I do know that, and I realized that. So I am going to give you stuff to help you understand what you're looking at, and come to the next Zoom call on Friday with a stock that you looked at. You don't have to know anything about anything about anything. Pick a stock, and we're going to go through, going to talk about price to earnings ratio, going to talk about diversification. I'm going to make it easy. I'm not going to overcomplicate it. So do that for me for Friday's Zoom call. And I appreciate you guys listening, and I'll let Mr. Levels do his thing.
Cool beans, cool beans. Action-packed fundamentals section, Carmen. As always, great job. Great job. Give me a second, y'all. Got some sauce for y'all tonight, man. Well, that's every night, but super sauce tonight. If I can get my chart up. All right, cool beans. So, hope y'all got y'all pens and pads tonight. Cause I got some sauce for y'all. So, tonight I'm gonna be talking about time and price. Price and time. Time and price, price and time. Time and price, price and time. So, when you trade in these markets, you have to know like which times are more volatile, which times are more slow, consolidated, and things of that nature. And so you have to study which times, which sessions these things occur in the market. And so with us knowing that New York is the biggest trading session of them all, and London is the second biggest, we would expect those to be the most volatile trading sessions in the market, right? Right. So I've been studying these markets for a long time now, and what I've seen with studying the London market and the New York market is that those are the best times to get volatile moves out of the market and to look for high probability trade setups. And so what I want to go over with y'all tonight is some price and time theory. So what I want to show y'all is going back to Monday. We're looking at the dollar on the left and Euro USD on the right. I should have left that up there. So, I should have left that up there. It's all good. So, going back to Monday, I told you guys that I wanted to see the dollar start out bearish this week. I pointed out this spike up in the market here. We had another spike up. So I told you guys, being that we spiked like that and we didn't break back above or get above this structure, the top of this blue structure, that I wanted to see the dollar start out bearish for the week. And so we can see that we did get the dollar to give us a bearish move to start the week out with. That's cool. We seen the dollar come down and fill in the rest of this insufficiency right here. See this little gap right here with this bullish candle, this wick. Then we have this bullish move, and then price come down, but it doesn't fill in that imbalance right there to come back and retest this wick to sell into that wick. We call that insufficiency. We see price come here, check it once, gives us a good buy up, and then to start this week out, we had another retest. Came down into it beautifully, shot up. So what I want to draw your attention to is this area here. This is what I call the London Open PIP zone. PIP stands for precise entry placement.
Right now. Have a good one.
Give me a second. Okay. So yeah, this is the London Open PIP zone, precise entry placement. And what you will find if you study time and price is that on Monday and Tuesdays, mainly on Tuesday, let's just say Tuesday, mainly on Tuesday, the market will give you a precise entry placement opportunity. So if you look down at the time here, that's 2:45. This is 3 o'clock. This is London Open. At 3 o'clock, this is London Open. We see London open. So down to give you that precise entry placement. And I know entry is spelled with an E, everybody, but we talking pips here. So it gives you that opportunity, and then we see price spike up, give us that bullish move. So what usually happens on Tuesday is during London's open, we usually see the weekly low or the weekly high for that pair that we're charting. We usually see the weekly low or the weekly high for that pair formed on Tuesday around London's open, usually between the hours of 2 and 5 o'clock. So, for instance, if we look here, this is 2 o'clock. This is 5 o'clock. This is 5 o'clock. 2 o'clock. So it isn't like 100%. So don't go thinking it's 100% and say, oh, Mr. Levels said that the market formed the weekly low or high every Tuesday at London Open, because it don't work like that. It don't work like that. It's not 100%. But I have found it to be about 80 to 85%. So, keeping that in mind, we see this London Open pip zone opportunity, precise entry placement opportunity, and we see price slap up. So when I see this, I say, okay, there's a huge probability that this is the weekly low for the dollar. Okay. And so we see price shoot up, and we see New York open. This candle here is New York open, 9:30. This down candle, right? That's New York open. We see price come back down. What does price do? Price come back down, retest the top of my price level, this price structure here, and shoots back up. Comes back down, doesn't break back below, keep pushing up. Now I have some added confirmation that this was indeed the weekly low. And so now I can have an idea on what's going on with my currency pairs. And so if you look to your left, to your right, you'll see the exact opposite happen with time and price on Euro USD. You'll see at London, instead of selling at London, Euro USD did what? It bought. If we go back to Monday night's call, what was I supposed to be doing? My bad, y'all. I had to get this back up here. Should have left it up there, like I said. Okay. All right, let's go. So, if we go back to Monday night's call, we was looking to buy off of structure because why? We expected the dollar to start out what for the week? Bearish. So we would of course be expecting Euro USD to start out bullish. Cool beans. So we get the bullish move for 40 pips. And then like the dollar, we see if we look to our left, it's almost guaranteed that Euro USD came up to fill in some buy side insufficiency. And then did the same thing that the dollar did, only in the opposite direction. Slammed up, slammed down. Boom. We see here, New York open right here, 9:30, right here. We see price push back up and retest what? A structure that you already got in place, that I already had in place. What did I tell y'all about these structures and these levels? They forever stay relevant. They hold their relevancy. So whenever they're broken through, you can just look for them to be retested on the opposite side, and you can take your trade on the opposite side. We know this. So once we see the dollar push up like this, come down, respect, we know that the dollar, we know Euro USD is coming down, respecting. The dollar continues to push up. Of course, Euro USD continues to push down. That's how you monitor time and price and price and time. That's how you can put yourself in the position to capitalize off of the market during the most volatile time of the day, during the most profitable time of the day. You can get in, get your bag, and get out. So last night in the group chat, Brother McKenzie, he dropped the message, said that he was looking for the dollar to come down, fill in this gap, and keep pushing up to come and retest this high over here. As I told him, that was a great observation. I can tell that the brother has been studying the material, the YouTube material, paying attention and taking notes in class. He's been studying to show himself approved, because that was a great observation. That was exactly what I was looking for. And we see the dollar did come down, fill in that gap, and continue to push up. So with you knowing that, McKenzie, you should have definitely caught this Euro USD sale. That sale would have been up in here. You should have definitely caught that, or even this one right here off of structure. So I just wanted to hip y'all to that time and price workout right there. I call that my time and price workout. So y'all study that, y'all monitor that, y'all keep notes of that. Listen, man, you're not gonna get it the first time you do it. The second time you do it, you might get it the first time you do it. You might, and then you might not get it the next 3 times. what I want you to do is just start practicing it and start getting your eye in the habit of noticing it and paying attention to it and recognizing it when you see it happening, so you will be aware of it. And then the more and more you study it, the more and more you practice the strategy, the more and more you see the setup, the more and more you see it happen. As you do it more repetitively, the more and more it becomes second nature to you. And so time and price, that's what it is. That's all there is. Time and price action, market structure. So we're gonna jump into technicals. So with that being said, I do want to see the dollar continue to pump to the upside, meaning we very well could see the dollar come back down here since this price level here with this insufficiency in there, this sell side insufficiency. We could very well see price come down in there before we continue to the upside. But I do want to see the dollar swing to the upside when in and in the week to the upside for the week. Meaning I would like to see the dollar get back above this high and potentially get up here to retest the bottom of this structure. So looking at Euro USD, with that being said, I would like to see Euro USD continue to push down. We did get the buy, like I said, the bump that we was looking for Monday, 40 pips. Then we slammed down, came back, retest the structure, sold off nicely, back down. This was some sell side insufficiency that I had marked from December. We got that filled here, however. So now we're back in it. So we could be getting back up in there. I would like to see us, if the dollar keep pushing heavy, see us get up in there, come back and retest to come down and retest these lows before we see Euro USD start to push back up, because I do want to see Euro USD continue to the upside overall. So that's what we'll be looking at for Euro USD, GBP USD. We got a bump up. That was the buy we was looking for in the beginning of the week. Because of course we opposite the dollar the beginning of the week. So we was looking for the pound to be bullish. 40 pip move up. So you either took partial profits, took profits, or broke even. And then we see GBP USD sell off hard, come back and retest, don't get back above previous highs, sell off again, and continues the downtrend, come back for the pullback retest of the structure and keep selling. And just like with Euro USD, if the dollar continues to pump up, then I will be expecting the pound to continue to push to the downside. And I'm looking over here to the left. I do see a lot of sell side insufficiency over here. That's beautiful. So yeah, we could very well see GBP USD. Yeah. Mm, let's see. Yeah. Just because this the pound, she probably will push back up here just to squeeze early sellers out and give us this continuation to the downside. So that's what I'd be expecting out of the pound. For the rest of the week, same thing with NZD USD. Got the bump that we was looking for beginning of the week. I think that was like 40 pips too. Nah, that was like 29 pips. 29 pips. Take partials or break even. Breakthrough retest. Of course, if you're monitoring the dollar, you see the dollar retesting the structure for the buy to the upside. So you know NZD USD is retesting the structure for the sell to the downside. Common sense. And we rocking like that all the way down. So let's see if we can get a retest. Oh yeah, I see. I see you. Mm-hmm. Yeah. Yeah, that's beautiful. So that's what I'll be looking for out of NZD for the rest of the week. Looking at silver. All right, looking at silver. Silver did give us our push up. Um, Gave us a good push up too. And then you know what it is. Silver just went crazy. Yeah, she went crazy. I need to take some of these out too. Get up out of here. Mm-hmm. Okay. All right. See. I see this all right. I don't like that. I don't like where that look. It ain't what I want to see. But we'll see. Mm. let's see if we can. Oh yeah, I like that. They ain't perfect, but they fairly relevant. These lows right here is clean. They real clean. They real clean. Real clean. So let's see if we can see silver give us a good sell since we want to see the dollar pump it up for the rest of the week. Now gold, I don't know what's going on gold, man. Gold is acting strangely weird. Yeah, but yeah. So she didn't even get above the structure. We wanted to see gold get above the structure retest and give us the sell up give us the buy to the upside like silver. She ain't even attempt to get above the structure. Let me see what we was at Monday night at 8 o'clock. So we was up in here. We was expecting her to get up there, break above the structure, retest, keep to the upside. But she didn't even attempt to get above the structure. She just consolidated right here and then just fell through the floor. Pulled back and finally came down to retest. The structure that I wanted to see it retest again when we tested here back in February. Um, I mean, what was that? The beginning of February. So if you guys recall, go back and watch the recordings. I told you guys that I still wanted to see gold come back down into this price level again. Mainly if we couldn't get back above these highs, previous highs. We see we came up in here, spiked up, but we couldn't get above the structure and start back making newer highs, getting above the highs. And so I told you guys that I did want to see gold come back down and retest. And we can see what's this. We can just count from there in the middle. We ain't gonna count from the beginning of the price break. But from the middle of the price break to price coming back, it's about a week. So it took a week for us to get back down here. Sometimes take longer. Sometimes it don't take as long. Just gotta let price do its thing. But if we expecting the dollar to keep pushing up, let's see what we got to the downside on gold. What's that? 1712, 17.9. Let me see. Oh yeah. Mm-hmm. Oh yeah. Mm-hmm. Yeah, we can't get. Let me see. Yeah. Keep my eye on gold. I ain't messing with gold for right now, but I see what she might be up to. So I'm gonna keep that in the pocket. Um, so first I'm gonna be monitoring to see if she can even get back above this structure, which knowing gold, she gonna give us some action. I got my eye on this engulfing candle right here. We got this structure above it that it just retested and couldn't break. Then we get this thick, aggressive, bearish move. Get back down up into here. Now let's see if we get back up in here to fill in this. Yeah, let me see. Oh yeah. Got my uh-huh. Yes, sir. I see. I see. I see. Mm-hmm. Lord knows. Yeah. So yeah. I want to see gold get up in here. See if we get up in here. Um, had my stop loss up here above the previous high. Try to ride that thing on down to 17.9. What was that other price? 17.12. 17.9. Yes, sir. That look like it might play out beautifully too. Good. Keep your eyes on gold, y'all. Um, let's take a look at oil right quick because we know what does oil correlate with. Somebody tell me. Somebody tell me. Somebody tell me. Drop it in the chat. What does oil correlate with? What does it correlate with? Somebody drop it in the chat. Let me see what we got going on. Anybody answered it yet? Somebody drop it in the chat. The dollar. Yes, sir. My boy. You know. Yes, sir. The dollar. Yep. So, broski, I'm glad you answered that because knowing that the dollar oil correlates with the dollar, and you were expecting the dollar to sell last night and fill in that gap. Look at oil. That's not surprising because oil correlates to what? The dollar. Exactly. So if you was expecting the dollar to sell and fill in that gap and then buy to the upside, you should have also been looking for oil to sell, fill in that gap, and buy to the upside. And look at that. Beautiful. Absolutely beautiful, broski. Absolutely beautiful. So everybody keep that in mind. All correlates with the dollar. Moving on to U30. Okay. So we wanted to buy you 30. Well, we wanted to see you 30 sell down to structure. That was the sale that you guys seen me post. I got in right here at the tippy top, of course, down to structure. I bought here because we was looking to buy here. Caught about 500 and some change, but I didn't catch all of the 500. I got stopped out at about 250 pips here halfway once we started pumping because I did expect she was going to keep pushing. So I moved my stop loss into profit and hopes that it keep pushing, but price wanted to go somewhere else. So stop me out in profit, no harm, no foul, take my money and run. I see the push through the structure. Price almost comes back up to the structure. Doesn't quite make it and then continues to sell. Then we see the accumulation right here, aka consolidation. And then look at this right here. Sell side insufficiency. All the way down and filled it in. Came down, accumulated orders right here, created this beautiful floor. What I tell y'all about these equal lows, especially when you see them clean like that. Look how clean them equal lows are. Look how clean they are, y'all. You know what I call that. What dollar bills say? Money, money. Yeah. So yeah, and then we see the accumulation. We see the accumulation of the orders. We already seen price slam down through the structure. Come back, give us the retest. So now we accumulating. Me looking at this whole price movement, being that I was expecting a continuation of the buy right here, and we slammed through that structure like that, came back, spiked up hard, but didn't get back above the high. I'm just following price action. Slam down again, pull back, don't get back above the previous high, sell off again, pull back, don't get back above the previous high, sell off again, create those beautiful equal lows, pull back, don't get back above the previous high, slam down, clears all this liquidity for the early buyers. Because these people, once they seen this floor, once they seen this support created right here, the average retail trader, which is 90% of traders, seeing this as a support. So what are they going to do when price get back around to it? They're going to buy. And what is greed going to do? Greed is going to make them hold this trade in hopes that it's going to go through the roof, just like I was hoping that it was going to go through the roof here. But I was smart enough to know that once it's blue, it's on you. And money in the pocket is always better than money on the table. So what do? I always move my stop loss into profit because I got to secure the bag, baby, always. But 90% of traders, they can't master that emotion that we call greed. So what they do is they're gonna hold here, and some of the really greedy ones, they're gonna add another buy position here as well. Where's their stop loss gonna be? Right here below this low. Um, or even a little bit below this low, because this would be the support. So either here or here, either way, it don't matter because the market makers and the institutions and the banks are coming for all of it. And as you can see, greed gets wiped out. All these stop loss here wiped out. These stop losses here. Even these stop losses here wiped out. Boom. Bank snatch all of that up and then pew, pops it up. And I'm cool with that. So looking at U30 now, I want to see if we get back above today's high. Yesterday's high, my bad. Because what did I tell you guys? The weekly high or the weekly low usually forms on Tuesday during London session. When was London session? Tuesday? Right here. This candle right here, the 3 o'clock candle. So we can see price has came back up. We see this wick right here. Price came back up. This is London's open. I'm paying attention to this high because if you notice, this high was created. And then look at what we got here. Boom. I pay attention to that. That looks like a very aggressive candle to me. Don't it look like a very aggressive candle to you? Yes. Then we see market pull back up. This is where I got in that sell because I was expecting price to come down and then buy here. Boy, I wish I would have held that thing. Good gracious. But that happens like that. No emotions. It's cool. But I'm paying attention to this high. And if price don't get back above this high, then once she get back below this structure, I'm selling. Selling. Stop loss above here. And I'm going to sell to the top of this structure because I know and understand that we still are in an overall uptrend. And the market is holding that uptrend. Just because we had this sell right here that these lows over here wasn't broken. And this is the 15-minute chart. So yeah. So we trending up strong. So this is a level of imbalance. As Michael Hudson coined it, fair value gap. I like to refer to it as imbalance so I don't have to keep referencing him so I don't get sued. So this is imbalanced. And if we can't get through this imbalance, create another support and come back up and create another high and break this high, then I'm going to be looking to short U30 for the rest of the week. Meaning, once we get back below this structure here, in my mind, my way of thinking, once we get below this structure here, then U30 has confirmed that it cannot get back above this high because it has tried and it couldn't. So I will be looking to at least 1,000 pips down to the top of this structure here. So anywhere from 750 to 1,000 pips. I'm cool with that. That's a whole lot of pips. So and we got a good chance that we could start seeing U30 make its way to start filling in some of this sell side insufficiency that we have. Look at all this down here. Yeah. So if we do break below there and we catch this sale and we can't get back above here, I'm gonna be looking to short U30 all the way down until she get ready to start pushing back up. So everybody keep that in mind. I'm gonna stop sharing.
I just realized they have an at home right here by the Metropolitan.
Yo, yo.
And I'm going to
Let me hit you right back.
pass it over to Broski. You got anything for us, Ghost?
Yes. Let me get my screen up. That was great too, man. I'm gonna hold everybody up, but I'll just bring something up. Let me share screen. What's my screen right here? Yeah, I see my screen.
Yes, sir.
All right. I just got stopped out of this gold trade, but these are some of the trades I took today. I just want to show you guys how I take my trades. When I'm momentum trading and trading with the trend. I'm gonna start with the U30. These are the trades I took. This is a trade I was just currently in, and I just took my profit. Being I got stopped out in gold, I just took my profit right here and reached all the way to my TP. Once it started turning around, I took my profit. But I started here. Like Mr. Levels told y'all, once these equal lows got took out, I was waiting for the dip and then to come back up. This is a beautiful setup. I look for on buys and sells. I look for the equal highs or the equal lows, because I know, like Mr. Levels said, that a lot of retail traders is going to take these buys right here, and put their stop losses below the previous structure. So they're going to get stopped out for jumping in too early, and a lot of people with sell stops is going to get pushed in. So they're going to take these buyers out and these sellers out. Then it's going to go to where it's going to go. I waited for that. This big wick up. I waited for it to come back down. Candle formation. I took my buy right there. Took profit. Just price momentum trade. Once this broke up here, this structure right here, and it came back down, I jumped in another buy right here, shot it back up. I just kept repeating, just having patience. And these was all my entries. Came back down, candle formation. I like to trade off a lot in engulfings, and these were just perfect. It just took patience. And this was my last, I got this one. This is my last trade. I just was literally in. I jumped in right here. If you know how I trade, you see why I jumped in right here. Little to no drawdown. It didn't quite hit my TP. I wanted to see if it could pass this and get up here, but I took this trade right here. I'm just trying to get into a habit of trading the trend and not really counter trading too much. And waiting for the reversal to actually trade the other way. And the reason why I'm doing that, I can actually just focus on that now because I'm trading more than one pair now. When I was trading one pair, I was trying to catch the trend, counter trend, catch the trend, counter trend. I was giving a lot of my profit back on some of the counter trends from trying to call it too early, being impatient. So those are some of my trades. I just lost on this. I just got stopped out on this gold trade, on this short, but these are my trades from earlier. Just trying to trade momentum. This setup came from where we at? Excuse me. This setup came from right here. I was waiting for it to come back up here to excuse me. Right here. That was over there. After this big push down, I was waiting for it to come back up here and hit this zone. This was a zone of mine. So I took my sell right off of there. I'll go back down to this 15-minute chart. Took my sell off of here. Had 3 plays in gold today. So once it came down, it formed a floor. Once it pushed through this floor and came back up and the floor became a sell-in, I took me another trade. This was off the bottom of an engulfing. So this was another sell I took. It blew through my TP. I didn't take it all the way down there. And this was me taking another sell right here off of this big push down, but I lost. I got stopped out of here. But this is what I mean when I just trying to trade with the trend and momentum trade. Once it breaks through the structure, once it breaks through the floor, and the floor now becomes a ceiling, or vice versa, that's when I take my buys and my sells, and just keep trying to go with the momentum. GPB, I would just in this sell. GJ, I was just in this sell. I actually moved my profit to right here, to SL right here. That's why you don't see no stop loss up here. I took my profit right here. I moved my SL. So when it pushed up past this 15-minute engulfing down here, I was out. I was out of there because I seen I was already about to lose my gold trade. I didn't want to give this back, and I was already up on my US 30 trade. But this is another play I was waiting for off this structure, wicked off it perfectly, pushed down. This became the floor, broke through it, came back up. Once it wicked off of this, this is this yellow line when you come through. This, I'm gonna change it yellow. This is the New York Open. So once it wicked up and couldn't take out this New York Open and came back down, I waited for confirmation and jumped in. So this is me just trading with the trend, trading just momentum trading, just trading off of momentum. I believe I did, well, obviously I jumped in my gold trade too early. I didn't jump back in this just now because I was listening to Mr. Levels and watching everything he was doing. But I may have jumped back in here just to try to and just keep trading with the trend until I get stopped out and it goes a different way. I just try to keep trading with the momentum, whichever way it's going. Even though GJ is up, this was a pullback. I was actually trading a pullback. So I really had it coming down to here. It still might come here to this structure. I might have entered that sell too early. So I'm going to be monitoring it because it is moving back down again, but I already took my profit. And like I said, I didn't jump back in. I really had it coming. This was my TP1, but I really had it coming all the way down to this structure right here. But that's just it, man. Just trade, just momentum trading, being patient and catching the swings. Once it breaks through and a floor becomes a sell-in, or vice versa, I'm jumping back in if I have the right candle formation. If I have some engulfings, if it doesn't break through New York and London's open, and things like that. So that's just pretty much it. I'll send out some signals tomorrow if this thing plays out the way I want to do it. So just look for that in the Telegram. But I'm just letting the market tell me what it's doing right now. And if it gives me momentum, I'm just going to keep going the way the market is telling me to go. Whatever way it's going, I'm just going to look for the perfect entry. So that's just what I'm doing. Lately, my counter trends has been they ain't been on point like they usually are. So I just decided to just keep trading with the trend. As far as US 30 go back again, like Mr. Level said, if it gets up under that structure, I will be looking for it to sell too, because it definitely didn't cover it couldn't break these highs. And this is looking like this is holding right here. Like it can't break this. So a sell would definitely look like it's coming in form. That's exactly why I took my profit. I seen it and then listening to you talk yourself, that definitely made me close out that profit on that U30 instead of trying to get them last little bit of pips. But that's just it, man. Momentum trading, guys. If you see something going a certain way, once it breaks the 4 on the sell in, you should start looking for your entry. That's it. That's all I got. And I'll be sending out a signal tomorrow if this plays out the way that I expect it to.
Cool beans, man. Great job. We appreciate you as always, brother.
Absolutely. I appreciate y'all.
Absolutely. With that, I'll start the recording and take any questions.